I'll be going through with you Groupon Inc stock, and just type it in Google and click enter. You can see the name here right now, and it's Groupon Inc Common Stock, and that's the symbol, and it's 2.71 US dollar for one stock. It's billions market cap. It's a big size firm. There's no dividend yield, so any company that is paying dividend, that means they're financially very strong. They have a positive side to it because after paying the creditors, loans, liabilities, they still have extra money. That extra money pays to shareholders as dividend. But this um, but this firm doesn't pay any dividend. It could be two reasons. Maybe it's not financially strong, or maybe it is financially strong, but it chooses to pay the extra money. It chooses to instead of paying to shareholders, it reinvest in its own firm to expand further. So there could be many reasons. So this is a very important aspect to judge a firm. Let's go to Wikipedia and see when was this founded. I'll just copy that. Sorry, I'll just type in Wikipedia, I guess, and I can see that I can just look at this box. It says where does it say it's founded? Launched, I think it says that's the same as founded, maybe 10 years ago, 2008. And I can just go back now and I can just copy this exactly, and I want to see what employees who work there think about this firm. So what I'll do is I'll just go to Indeed and I'll click enter, and I'll see 705 reviews and it's 3.6 star. Read through the pros and cons itself, check out the photos, the jobs listed, the questions asked, and I want to see the reviews in Glassdoor as well. That's brilliant. And let's have a look. I can see 2,700 reviews. It's 3.5 star. Read through the pros and cons itself, the jobs listed, the salaries they're paying, the interview question, the benefits they're getting, in the photos. And please check it in Just Your Patents as well. Check out the patents of this firm as well. And I can't see any patent, so what I'll do is I'll just delete that, click enter, maybe the patent will come. Yes, it does. So I can see, please concentrate on applicant or signee because these are people who have the full rights of patent. I can see patents in 2012, 13. So any company that has patents, that means they are very strong. It's difficult to beat that firm because they are continuously innovating. Patents mean innovation. They're continuously innovating. That's brilliant. And please look at for recent patents in 2015, 16, 17, 18 because that means they're still innovating. That's very important as well. So we have recent patent in 2015. Just go through the list yourself. 2018 is the recent patent. So it means they're still innovating. 2017, 2016. So there are a lot of patents. That means this firm is very strong. Let's check out another pages. It has many pages. And now let's go to Young Finance, and I want to see who the key executives are and what salaries they are getting. That's very important for me to know as well. So I'll just paste it here. Okay, I'll just remove this part, and that's the one I'm clicking because that's the NASDAQ symbol. Go to profile, and I can see all the information about sector industry employees. I can see 5 key executives, all of their salaries have been shown. So that's brilliant because they have shown us all the salaries. So it's very transparent in terms of salaries of key executives. So we can build trust with this firm very easily. Let's go to my macro trend, click price ratio, price book ratio, type in Groupon, and if the price book ratio is less than 1, that means stock is cheap, it's a discount, it's a sale. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. So let's have a look. Okay. So I can see we have 5 is the price book ratio, which means the stock is 5 times more expensive in August. So somebody buys right now, they'll be paying 5 times more money to buy the stock. In 2017 September, it's 15 times more expensive. So people who bought in 2017 September, they paid $5 to buy something that was $30.34 worth. And I think the cheapest it was in 2012 when it was 3.9 times more expensive. So people bought they paid $4 to buy something that was $1 worth. Right now it's 5 times more expensive. Let's go to other ratios. I want to check the current ratio. If the ratio is less than 1, that means stock is very risky because liabilities are more than assets. I'm looking for 1.5 or more than that for it to be brilliant, for it to have a good margin of safety, and for it to be safe. So it's still loading right now. Please be patient with this website because it takes time to load, but once it's loaded, it will make your life quite easy. Please let me know if you want to ask any questions regarding this stock, or if you want me to make a video on a particular stock that you are researching right now, or if I'm going too fast in the tutorial, please let me know. I'll slow down. Okay, I can see that the current ratio is less than 1.5, so it's a risky stock. I'm looking for 1.5 or more than that. Let's look at the previous trend. Has it ever been 1.5 or more than that? That's my question. So I can see that since 2009 December up till now, consistently it's less than 1.5, so it's a it's a risky stock. Let's go to debt equity ratio. I'm looking for 0.5 or less than that for it to be brilliant and safe. This ratio will tell me if the stock is mainly operating on, if the company is mainly operating on debt or equity. Let's have a look. Right now, I'm looking at, I would say, 0.68, which means stock is risky because it's more than 0.5. Let's look at the previous trend. Has it ever been 0.5 or less than that? Just in 2016 June, it's a little bit less than 0.5, so it's a safe stock that time, but since 2016 September, it has always been more than 0.5, so it's a dangerous stock, it's a risky stock. Let's look at return on equity. I'm looking for 8% or more than that for it to be brilliant. Right now, I can see that it's less than 8%, a lot less than 8%. I'm looking for 8% more than that. Let's look at the previous trend. It's even a minus equity, a return on equity, minus, minus, minus. So I can see that since 2011 December, consistently it's giving me a minus return, and then 2015 June it's a positive return, and then just for a while, and then it's a negative again. So basically, it's nearly all the time it's a minus. It's equity, return on equity. So in terms of return on equity, it's not. It's always been minus. So this is not what I'm looking for.